US government shutdown ends, the huge market move is here. Welcome back, traders. After a record-breaking 43 days, the longest US government shutdown in history is officially over. President Trump signed the funding bill late Wednesday, getting the government back to work until January 2026. The immediate political chaos is gone, but the market volatility is just beginning. The biggest impacts will be seen immediately in gold, NASDAQ, and currency pairs. The data blackout is over. Get ready for a shock. The political standoff caused massive disruption, nearly 1 million, and federal workers were furloughed. But the most critical consequence for traders was the data blackout. For the last 6 weeks, agencies like the Bureau of Labor Statistics couldn't release crucial reports like non-farm payrolls and FP, CPI inflation, and retail sales. The expectation is simple. When this wave of delayed reports finally drops, it will trigger an outsized, volatile market reaction. Traders will rush to price in 6 weeks of information and speculate on the Federal Reserve's next move. At foreign currency, the USD double whammy. The US dollar has been trading purely on sentiment for over a month. What to expect? We could see a double whammy of volatility in the short term. Initial relief. The end of uncertainty usually provides a slight, immediate boost to the USD as global market risk sentiment improves. Watch for minor selling in safe haven currencies like the Japanese yen JPY and the Swiss franc. CHF. Data shock. The true move will come from the economic reports. Strong data high in FP CPI. This could lead to a sharp USD surge and winding any Fed rate cut bets that were built up during the shutdown. Weak data. If the reports show significant economic damage, the USD will face renewed selling pressure. Gold's new bullish base. Gold's resilience during the shutdown was textbook. It acted as the ultimate safe haven, pushing past major resistance and holding firm above the psychological $4,000 mark. What to expect? The end of the shutdown removes one layer of risk which is typically bearish for gold. However, the market's focus immediately shifts to the deteriorating U.S. fiscal outlook and high national debt. This continues to underpin gold's long-term bullish trend. Watch this. If the upcoming U.S. data is surprisingly weak, prompting the Fed to signal a dovish turn, gold could see a new leg higher, targeting all-time highs above $4,400. NASDAQ, tech rally or valuation trap. The NASDAQ 100 is showing the most immediate relief, with money rotating back into equities, heavily propelled by the Magnificent Seven and I-linked stocks. The end of the shutdown is a green light for risk-on sentiment. The risk, tech stocks have gotten quite stretched on valuation. A mild corrective phase is possible, especially if the new data suggests a higher for longer rate environment. Traders should look for strong support around the 25,200 region. Traders, the volatility is not over. It's just shifting from political gridlock to data-driven chaos. Hit that like button. Subscribe for our live updates when the NFP report drops. And tell me in the comments, where do you see gold heading after the data dump? Happy trading!